Uber stock has fallen 16% over the last 3 months, taking the company's market value to $142 billion. Account for cash, investments and debt, and the enterprise value is $146 billion. Revenue over the last 12 months comes to $42 billion, with $4.4 billion of net income and $6 billion of free cash flow. So Uber is currently valued at 3.5 times revenue, 32 times earnings and 24 times free cash flow. Uber stock has fallen over the past few months despite posting highly impressive growth. In the most recent quarter, gross bookings on the platform hit $41 billion, representing 4 straight quarters of at least 20% growth. Revenue for Uber's mobility segment was up 26%, delivery grew 18% and monthly users hit 161 million. Crucially, operating leverage means that Uber is now highly profitable. The company reported $1.7 billion of adjusted ebitda and $2.1 billion of free cash flow in the last quarter alone, and there should be more growth to come. Uber is still growing in international markets like South America and Asia, while ridership in developed markets still has room to expand. Network effects from the Uber app are leading to high frequency usage of Uber's services, including the delivery of groceries. Customer stickiness is supported by Uber's growing membership program, Uber One, which was up almost 80% in Q3. Advertising can add to profits as well. Management said that advertising on Uber delivery is currently around 1.5% of gross bookings, and they expect it to hit 2% over time. If Uber repeats another 4 quarters of 20% booking growth while maintaining a 4.1% adjusted EBITDA margin, the company could post almost $12 billion of adjusted EBITDA next year. That may sound optimistic, but it's not too far off the company's outlook. In a presentation shared last year, management said that adjusted EBITDA should grow in the high 30s to 40% over the next 3 years, with a free cash flow conversion in excess of 90%. To put that into perspective, if Uber grows adjusted EBITDA 37% a year for the next 2 years, free cash flow would hit $11 billion. A 20 times multiple on that figure would then take the valuation to $220 billion, which works out to an upside of 51%, even after accounting for high levels of stock-based compensation. Of course, the big issue for investors is the impact of autonomous vehicles. Waymo has made impressive progress, hitting 4 million rides last year, and Tesla's robotaxi plans are a looming concern. But Uber's scale shouldn't be underestimated. The company is now completing 30 million trips a day, and to displace Uber, Waymo would need to build out a gigantic fleet of autonomous vehicles costing billions of dollars. It makes more sense for robotaxi companies to partner with Uber, something that is now happening in cities like Austin, Phoenix and Atlanta. The development of robotaxis needs to be observed, but Uber is firing on all cylinders and the shares look attractive. But these are my personal opinions, not financial advice, and I do own shares in Uber. For more investing videos, make sure to join my newsletter at 3minutebreakdowns.com. Thank you for watching.